Imagine waking up one morning and realizing that every national currency is gone. No US dollar, no euro, no yuan, no yen. Instead, every country on Earth now uses cryptocurrency as its only form of money. Your salary is paid in crypto. Your rent is charged in crypto. Taxes, groceries, fuel, healthcare, all crypto. At first, it sounds futuristic, even liberating. But when you look closer, the reality becomes far more complex. So today, let us explore what would actually happen if cryptocurrency replaced all national currencies, based not on hype, but on real-world economics, blockchain technology, and global finance systems. To understand this scenario, we need to understand what national currencies do. Modern money is not just a payment tool. It is a control system. Governments use currency to manage inflation, control interest rates, stabilize economies during crises, fund public services, respond to recessions. Central banks like the Federal Reserve, ECB, and People's Bank of China constantly adjust money supply to keep economies functioning. Cryptocurrencies, by design, remove central control. This single difference changes everything. If crypto replaced all national currencies overnight, the first result would be global economic shock. Why? Because crypto prices are volatile. Bitcoin, for example, has historically moved 5 to 10% in a single day. No modern economy can function if wages, food prices, and rent fluctuate that wildly. Imagine, you earn the same salary, but its value drops 8% in one day. Your rent increases 12% overnight due to market movement. Food prices swing, hourly governments would lose their ability to stabilize prices. This alone would cause mass panic, especially among lower-income populations. Traditional banks rely on national currencies to function. They issue loans, set interest rates, control credit supply, protect deposits. In a crypto-only world, fractional reserve banking becomes impossible. Central banks lose authority, deposit insurance disappears. Lending becomes extremely risky. Banks would either collapse, convert into crypto custodians, or become decentralized finance (DeFi) platforms. Millions of jobs in traditional banking would disappear within years. Perhaps the biggest consequence is this: governments lose control over monetary policy. No more printing money during crises, lowering interest rates to stimulate growth, quantitative easing during recessions. During events like COVID-19, governments injected trillions into economies. In a crypto-only system, that would be impossible. As a result, recessions would be deeper, recoveries would be slower, economic inequality would increase. Governments would still exist, but they would be weaker. Cryptocurrency transactions are traceable on public blockchains. This means every payment leaves a digital trail. Governments could track income instantly. Tax evasion becomes harder, however. People could also use privacy coins, use decentralized wallets, operate outside government systems. This creates a constant tug-of-war between financial transparency and privacy. Countries with weak institutions would struggle to collect taxes at all. Most major cryptocurrencies have fixed supply limits. Bitcoin, for example, will never exceed 21 million coins. This creates a deflationary system. Deflation sounds good, until it isn't. In deflation, people stop spending, they hoard assets. Economic activity slows. Why spend today if your money is worth more tomorrow? This could freeze global economies, especially developing nations that rely on constant spending and growth. In a crypto-only world, early adopters dominate. Those who already own large amounts of crypto gain enormous power. Wealth concentration increases because no redistribution through monetary policy, no inflation to reduce asset value. No central intervention. This could lead to extreme wealth inequality, political unrest, social instability. Money would become less about productivity and more about early access. On the positive side, crypto removes currency exchange barriers. No. Exchange rates. Conversion fees, banking delays, global trade becomes faster and cheaper. However, volatility introduces massive risk. Long-term contracts become unstable. Governments lose leverage in trade negotiations. Countries could no longer devalue currency to remain competitive. Crypto systems would become national security targets. Governments would fight over blockchain control, network influence, mining dominance, validator power. Cyber attacks would replace economic sanctions. Instead of freezing bank accounts, nations would attack blockchains, disrupt consensus, target exchanges. Financial warfare would become digital and constant. The truth is, most people wouldn't. Why? Because crypto requires digital literacy. It removes safety nets. It shifts responsibility entirely to individuals. If you lose your wallet keys, your money is gone forever. No refunds, no government bailout, no customer support. For billions of people, this system would feel terrifying, not freeing. The most realistic future is not replacement, but integration. Governments issue digital currencies, CBDCs. Crypto exists alongside national money. Blockchain improves transparency. Central banks retain control. This hybrid system already exists in early form today. A world where cryptocurrency replaces all national currencies would not be a utopia. It would be more transparent, more efficient in some areas, but also more unstable, more unequal, and more dangerous. During crises. Money is not just technology. It is trust, control, and coordination. Remove the system too fast, and the world doesn't become freer. It becomes fragile.